Good morning, everyone. I'm Vince Lancy, and in today's market rundown, we will discuss a story going around put out by Bloomberg about the $1 million bar of gold. We'll cover that. We're also going to do a very dry, thorough read of the actual markets, do some market analysis there. And finally, we have a report from ING on their outlook for a ceasefire in the Middle East. Let's start with the markets first. We'll give you the screen there. There's the hourly gold chart. The dollar is down 4.10180. 10-year yields are 387, essentially unchanged. The S&P 500 is 5610, up 9. The VIX is 1489, up 23. Gold is 2524, up 21. That's 85 basis points. Silver is 2980, up 34, up 1.17%, keeping pace in this run. Copper is up less than 2 cents. Well, now it's over 2 cents at 420. The gold-silver ratio continues to creep lower, even in a gold rally. Remember, gold's been rallying and silver hasn't lately. WTI is down 2 cents at 75 and change. Natural gas is 223, essentially unchanged. Bitcoin is very strong at 60,400, up over 1,000 points. Ethereum is 2650, up 12, not really giving too much follow through there. Platinum, palladium, both up equally. Palladium is at 940, up 9. Platinum is 964, up 11. Grains are all down. I'll leave those off the screen right now, but soybean is 996, down 3. Corn is 384, offered unchanged, and wheat is 546, down about a half a penny. So if you're looking at those markets and you're trying to make sense of them, there are 3 things going on right now that are kind of pulling markets in various ways. One of them is the DNC convention. Whether you think it's meaningful or not is irrelevant, unfortunately. People will do what they're going to do or be reminded that they need to do things, and they will do them. The second thing is the Fed's Jackson Hole meeting, where Powell speaks on Friday, is very important. I personally believe that he's going to hint at an inflationary floor being put in, meaning raising the target, but that's an idea that I have to develop a little bit more. And the third thing is gold's at 2,500, right? And markets are really trying to digest that because gold's been leading things lately. All right, we're going to get to everything promised right now. All right, no FOMO like precious metals FOMO. All right, what does that mean? There's a story in Bloomberg. We'll cover that. We'll include that in here. Describing gold bars being worth $1 million, right? And we're going to show you that. That's great eye candy. We'll do that for you. But there's something else that's really important that they're pushing, and they don't even know it. And that's why it's beautiful. Remember the toilet paper panic during COVID? There was no toilet paper, so everyone was going and buying more of it. That was a Giffen good panic. That was a Giffen good panic is if you're not familiar with it, but I want to put a fine point on it. A Giffen good panic is when a good that's needed, a necessity, that's not replaceable or substitutable in the short term becomes hard to get. So food is a Giffen good, right? Toilet paper is a Giffen good, right? You can different types of food. You can substitute tissues for toilet paper, right? You can do that. But in the beginning, people don't do that, and so they panic. And so everyone was hoarding toilet paper during the COVID panic. That's a Giffen good. Now imagine that for gold. Eventually, with toilet paper, people realize you can use tissues. With gold, you can make the case for Bitcoin, but I will not. Genetically, they're different for that reason. Anyway, that's why we're not even there yet. There will be no FOMO like precious metals FOMO. All right, there's our front page. You can look at that for a second. I'm going to read through a proper market rundown of stories regarding yesterday. Yesterday, equities kicked off the week on a strong note with U.S. markets logging 8 consecutive days of gains, and Europe followed suit with 5 positive sessions in a row. The S&P 500 rose 97 basis points, while the Euro Stoxx 50 added 64 basis points. U.S. Treasury yields flattened, especially at the long end, all right, as the dollar dipped. Meanwhile, oil and gold prices edged lower as the market began to reassess geopolitical risk premiums in light of new developments in the Middle East. That's how the day started, right? Asian markets were mostly firmer overnight, except for China, which softened due to supply concerns in an illiquid market. It wasn't long ago that recession fears gripped the market, leading to widespread degrossing and sharp price declines. We saw some of the worst performances in years or even decades for momentum trades like Japanese stocks, European banks, and the NASDAQ versus the Russell 2000. Yet here we are with markets now stringing together gains and the S&P 500 sitting just 1% below its all-time high. This is all last night coming in today. Comment: recent data has played a crucial role in the turnaround in markets. Last week's U.S. retail sales and jobless claims reports were healthier than expected. Walmart reported no signs of a slowdown in July and August, and Home Depot traded well despite missing estimates, highlighting the market's bearish sentiment not materializing. In response to the improving data, Goldman Sachs, who has provided a lot of the information that I'm writing this on, their economists have reduced the 12-month U.S. recession probability from 25% to 20%. If the August jobs report due in the first week of September is reassuring, we could see that probability drop to 15%. Another factor supporting the market's upward move is systematic flow. Although its impact might be overstated in a market with lighter liquidity, like the current one, where U.S. volumes were down 17% yesterday compared to the 20-day average, and European volumes were down over 30%, these flows can still be significant. Expect CTA releveraging, vol parity demand as the VIX resets lower, the unwinding of puts and corporate buybacks to provide a strong tailwind. A little bit wonky, but had to be said. The main risks going into today and possibly the rest of the week: a reversal in geopolitical developments. Last night, there were positive geopolitical developments. Doesn't look like the gold market cares too much about those right now. But the bigger, that could shake things up, right? But the bigger concern might be if Fed Chair Powell doesn't deliver the expected dovish message on Friday. Given the current data, the way things are shaping up lately, and the setup from the last FOMC meeting, the question seems to be whether we'll see a 25 basis point or a 50 basis point cut. That's really where we are right now. I would add that I believe that the cut isn't important more than I think what he says at the meeting, and I think it'll be significant. All right, moving on. No FOMO like precious metals FOMO. Giffen good, gold, there's no substitute. As the price of gold goes up, physical people want more of it due to the increasing utility of it. Shrinking space needed to store wealth. What do I mean by that? $1 million can now be stored in a space smaller than $1 million in cash, and with comparable weight. A bar of gold, I think, is 27 pounds, and $1 million in $100 bills is about 24 pounds. So if you're an extremely affluent person looking to store wealth, what are you going to put it in? You're going to put it in a thing that takes up less space. You're going to put it in gold, right? Okay. That's a Verblin good. So as people start to realize this at the high end, right? This is not toilet paper at Walmart. This is, I may as well put more money in gold because it stores more of my wealth and it seems to be stable. Well, that's a Verblin good. A Verblin good is a good that there is no substitute for. It also is status oriented. And the higher it goes in price, the less space takes up storing your wealth. So you buy more of it. The obvious comparisons to Bitcoin are there. That's one of the reasons why, by the way, I believe silver is going to go to the moon when this starts to really happen. When it starts to really happen, imagine silver worth $1,000. I'm not saying it'll go there, but imagine silver worth $1,000. You could store your wealth there, right? That's a lot smaller space. I mean, 85 ounces of silver to equal 1 ounce of gold. If you have money, you're not going to buy silver because it takes up too much space. Might collapse your floor unless you have a vault. If, on the other hand, silver's $1,000 an ounce, you're like, it's not a bad idea. I think I'll do that. And that's what's going on. Silver and gold there is no FOMO like precious metals FOMO. Trust me on that. We're nowhere near that yet. All right. Report the commodities feed, ceasefire hopes. ING put out a nice little report today. They note oil prices have come under renewed pressure following progress towards a ceasefire between Israel and Hamas. However, while Israel has accepted a ceasefire, the market is still waiting to see whether Hamas is on board. They're probably not on board. Gold's up $22 and oil's down 32 cents. This is proof that the Middle East is not why gold is rallying. It's the best. People are just, I can't get into it. Market news. All right. So here's the Bloomberg story we promised. All right. We're going to go through that story. We actually have it. Well, I guess we have it. We just sent it out to everyone, but I'll show you the Bloomberg version who are subscribers. For the first time ever, a bar of gold is worth a cool million. Did you know? Yes, I do know. A bar of gold is worth a cool million. The milestone was reached Friday when the precious metal spot price surpassed 2,500 an ounce, an all-time high. And it goes through all the other stuff that you're probably going to like to read. And we've already sent that out. You have access to it. But I'm just not going to leave all their advertisements up here because basically they're telling us what we already know. But what they are doing is they're like little Johnny Appleseed, just reminding people that gold is going up in price and you can store your wealth in smaller areas. And it won't be like toilet paper. You won't realize, I can use tissues. There's no substitute. Don't tell me Bitcoin is a substitute. I love Bitcoin. I own it. But Bitcoin doesn't have this kind of appeal to it because it's already at its max size or minimum size. Okay. It's going to go up for different reasons. All right. Data on deck today is Atlanta Fed Raphael Bostic speech. All right. These, again, you can listen to these if you want for educational purposes or for entertainment purposes, but they mean nothing in portfolio management. Only Powell matters this week. Going back to the markets, something that we covered this weekend that I want to look at now for you traders. See this here? It says not to fade this rally. It says as long as the market, we're looking at spot, as long as the market does not close below 2,500 spot 67 or trade below 2487.52 today, then this market will continue to have an upswing. On a more longer term, wow. On a weekly, there's nothing overbought about this. This little thing here, if you're a Bollinger Band person, this pointing downward away from where the market is going says that this market is theoretically just getting going. Going out to the monthly, it says momentum has slowed down. Well, think about it. We've had some pretty steep, is slowing down, but has not turned completely negated yet. So there you go. Combine that all with everything that Mike Oliver says, and I say, silver. Well, silver is this is a market getting more volatile when it's already too volatile to begin with. So I think people are starting to lose money in silver that are playing that whole gold silver game on a weekly basis. Believe it or not, silver's consolidating, and I would be happy to see it below 31 and above 27 for the next 2 or 3 weeks. And then the next leg higher would be very significant. I cannot believe that the metal, I mean, I just got to make this comment. I cannot believe that the metals are this strong going into what is traditionally sell season. We're not in it yet, and sell season does not rule everything, but to have these kind of forces this big makes me wonder uh, if this market isn't lower by Halloween. I don't know what's going to happen between Halloween and January 5th. These markets could really, really explode. And then you'd have to reassess. Between now, to put a finer point on it, between now and January 5th, January 6th, whenever the actual swearing in is, between now and those days, there should be dips. They will be bought if they exist. And there is no one who's going to short this market going into these BRICS summit events, the election, the actual inauguration. It's really that simple. Now, as those events come closer, you might see spikes and sell-offs. Then you're going to be less likely to be a buyer of dips in the short term. This is very much like an event-driven buy season. Love the market. I added silver 2 days ago, just so you know, because I thought, it's too cheap compared to gold. All right, folks, have a great day.